Hi, this is Joe Shahada. I'm from Top Tier Capital, and today we had the stock market all close higher. All the indices ended up higher today, and we are confirming this trend that we've been in for a while now. The first chart I have here is the S&P 500 futures, the daily chart, and this trend began back in the beginning of the year, and we're still stuck in this trend channel. And as long as we're in this channel, we can assume prices are going to go higher until we're definitively out of the channel, and that would ensue a correction, I believe. But for now, we just got to assume prices are moving up. So one thing I want to point out that's very important, though, is the RSI. The RSI has been trending lower while the market's been trending higher, and that's a divergence. And usually when that occurs, it's an early indicator for selling pressure moving forward. We haven't seen any of that yet, but I would just be cautious moving forward, and I am cautiously optimistic about the rally still going on, knowing that there is a divergence in the RSI. So this next chart is actually the monthly chart of the S&P 500 stock index, and you can see we're closing out at the highs here today, and this high is the previous high back in 2007. And you can see we're right up to it again. So we would be approaching it, and you would think this is a double top. However, if you go back even further, this is 2000. When we hit these highs before, we crashed. When we hit these highs back here, we crashed. This is the third time we're hitting the high. Now, I don't usually believe in triple tops or double tops. I actually know some investors that purposely buy every time that we are approaching a double top or a triple top, what have you. But I just want to make that clear that we are approaching a level that has been significant resistance in the past. But that's just another way to look at the market moving forward. Now I want to shift gears and look at Apple real fast. I've been following Apple for a while, so I would be remiss to not mention it. So Apple's been in this downward trend channel for a while now, since the highs. And it's a strong trend channel. We tested it twice on the bottom and the top. And yeah, it could be some significant resistance moving forward. I've circled it and arrowed it right there. And but more locally down here, we had a sideways channel that we were stuck in after the earnings announcement. And we finally closed above it yesterday, and today we opened above it, closed above it, and didn't even test the channel anymore. But we're already close to potential serious resistance here. And we'll have to see what Apple does when it hits this level. And if it does break out definitively of this channel, we can expect some serious higher prices. But we'll have to see what happens moving forward. I think Apple will break out because of just how oversold it was. Back at these two levels, it wasn't nearly as oversold as it is now. So that is Apple. Now let's look at the Nasdaq. And Nasdaq finally closed out of its sideways channel that it's been in since the beginning of the year. All the markets have been going up, but Nasdaq's been in this sideways channel. We had a fake out breakout over here, only to close down, and that was conveniently Apple's earnings. Imagine that. And then today we closed out of the channel, and this was a definitive close out of the channel. Usually, if you're kind of closed out of the channel like these ones back here, it doesn't really count. But we're a good ways off the channel. So that doesn't mean prices should move up from here. Usually it does. The problem is we're running into some significant resistance over here, or we should at least. This was a big congestion area at the previous highs, and if we can take out those highs, then I think we can move much higher. But now we also want to think of this trend channel that we were in as it's now going to be support if we do come back down to it. So that's the Nasdaq. I wanted to point those few things out for you. And let's move on to the Russell. These are Russell futures. I keep beating this drum, but I got to point it out as long as it's going on. The Russell actually today closed out at new highs for all-time highs. So that's kind of a big deal, but that's not the drum I wanted to beat. The drum I've been beating is the divergence. We've had a divergence in the RSI, stochastic. This is stochastic down here. RSI and stochastic have been diverging with price, and as long as that's still going on, we should be worried about a rally here. But at the same time, we're still stuck in the same trend channel that all the other markets are in, and we got to assume higher prices here as well. Now, the caveat with all of this is oil. And I've been watching oil because it's also been in the trend channel since the beginning of the year, like every other market. but it closed out of its channel yesterday, and today was its definitive breakout from the channel. It closed below the channel, it opened below the channel, and it even tried to test the channel and went down from it. So now this channel is considered resistance on the way up, and I think we could see lower oil prices moving forward. We also have the CCI trending much lower. So that's our analysis for today. I hope you find this helpful. You can find more analysis on our website at toptiercapital.com. We update all throughout the week on developments in the market and things like that. So thank you very much. Happy trading and good luck out there.